Good day, guys. This is Mr. D from D Forex. Guys, I know it's been long, it's been quite some time. Guys, I'm sorry, I've been busy with some other projects. You know that I'm a very busy man. Fortunately, I'm managed to make money in Forex so that I can invest in some other businesses, of which is good. I'm growing as a person, my team is growing. It's good to see other people growing as well, especially my team. I see people making profits, of which is great. Guys, in this video, what I would like to talk about is how to protect your capital. Number one strategy as a beginner, or number one strategy that you should learn, even if you're not a beginner, how to protect your capital. This is very crucial, guys, to know that how to protect your capital, because if you don't know how to protect your capital, you'll lose all your money in the market. Okay, before I go further, guys, I would like to request you to subscribe on this video, like this video, subscribe on it, press the notification button so that if I post a new video, you'll be the first person to see it. Okay, thank you. Can I keep it just 5 seconds to press that subscribe button? 1, 2, 3, 4, 5. There you go. Thank you so much. Thank you so much, guys. It is important as a trader to know how to protect your capital, because if you don't know how to protect your capital, you lose all your money. Remember, the market is not your friend. The market is not your friend, and the market will never ever be your friend. Market is very cruel. I remember when I started trading, within 15 minutes I lost $3,000. Can we imagine? Within 15 minutes, I lost $3,000. I always say, because you know why I came up with this topic? It's because one of the members in my group, in my Signal group, asked me, said, Mr. D, what is number one strategy that somebody should learn as a beginner? I said, the number one strategy is to protect your capital. Learn the strategy, master the strategy. It's like in boxing, or like in what you call in soccer. In soccer, they say make sure that your defense is strong. Once your defense is strong, you make sure that you protect your goals, you protect your balls so that you don't concede. Because to concede, it means that we have to work extra hard to equalize. So, of which is not easy. Even in boxing, they say make sure that you hit and you don't get hit. Yeah? It's like that. You hit, you don't get hit. Make sure that you duck. Even in trading as well, you have to protect your capital. I'm gonna share, I think, about 4 or 3 things that are major that will help you to be able to protect your capital without having a hassle in that regard. Thank you so much, guys. Let me jump to number one. Number one, make sure that your lot size that you use is up to the T, up to the standard. If you got a $1,000 account, I regard that account as a small account. If you got a $1,000 account, that's a small account, guys. Make sure that you risk 1%. Risk 1%. Your lot size shouldn't be more than, according to me, if you want to be a consistent trader, if you want to make money in this market for the next 5 years, your lot size, it should be more than 20, 0.20. I mean, if maybe not above, if maybe you get carried away, maybe if you are this kind of a trader who's very rational, not more than maybe 0.50 at least. So if maybe you got a $1,000 account, I always say risk 1%. I know that 0.50 is not 1% of $1,000, but I'm just making an example because we trade differently, our styles are not the same. So I'm trying to help somebody here that make sure that your lot size is up to the T. Most people, they expose themselves by the huge lot size. Maybe because somebody has a $1,000 account and you have 1,500 leverage. So now what you're gonna do, your lot size gonna be huge. Your lot size gonna be 2, or your lot size gonna be 5. So of which is not a way to go if you want to protect your capital. If you want to protect your capital, make sure that your risk management is up to the T. Thank you, guys. Number 2, don't open a lot of position at the same time. Don't open a lot of position at the same time. That's another strategy of protecting your capital. Make sure that let's say maybe you have placed a thingy, an order for Euro USD, okay, you place buy, you bought there, and thereafter you can see that, okay, now I've accumulated I'm on profit by 20 pips. What you must do, take your stop loss where it is, put your stop loss to the break even. A break even, now you are sure that now you're not gonna lose any money. You are not winning, you are not losing, but you are winning because you are 20 pips above. So, but make sure that now you are protecting your capital, that now you're not gonna lose. So you are in break even. What is a break even? Other people, they don't know what's a break even. A break even is a point where you've entered. Let's say you enter the USD maybe on 1.900. I'm making an example, okay, 1.900, and thereafter it start moving to your direction, and thereafter you take your stop loss, you put it just a little bit above or where you entered the trade, just to make sure that you don't lose anything. So which means now you are protected, you can't lose any money from the trade. Okay, so once you have done that, you have put your stop loss to the break even, now you can place another trade. Remember, with the USD is running on profit as we speak. So now we place another trade, of which that trade will help you, it will be like a new trade. So which means you are open up to the trade, which means we are vulnerable on the trade because it's not maybe on profit, maybe as soon as you place a trade, there's a spread. So maybe still on negative. It hasn't maybe go on profit. So you open the trade and you wait for the trade again to give you maybe 20 pips and above, and thereafter you take your stop loss to the break even, and you open another trade again. Just work like that. And this thing of opening so many trades, you open Euro USD, you open a dollar and the pound, you open Nasdaq, you open USD at the same time. That is not a way to go. That is not how you protect your capital. To protect your capital, it means you minimize your risk. You make sure that your risk is minimal. So you make sure that you protect your capital by doing what I'm telling you. Firstly, what I said it's your lot size. Mind your volume. Make sure that your volume is up to the T. I mean, number 2, don't open a lot of position. Now let's go to number 3. Number 3, guys, learn to take your losses. Learn to cut your losses very early. You can see, that's number 3, guys. You can see that now the trade that you have placed is going against you. So now what I'm advising you guys, learn to cut all those losses, the losing trade early. Don't keep on shifting the stop loss and say, no, it's still gonna come back. No. You're exposing yourself again. You lose that money, you lose that capital that you have worked hard to accumulate. So make sure that you accumulate a skill of being able to identify if this trade is not going to my direction, but it's coming against me. Let me cut my trade early. Let me cut this loss early before it becomes a huge loss. Once you learn that skill again, you'll never go wrong, guys. Step number 3, learn the skill of being able to identify the losses. That's okay, now my trade is losing, so let me cut it. Let me cut it early. Let me not keep on shifting the stop loss backward. Because most of the traders, they do that, especially the beginners. They keep on shifting the stop loss, taking it backwards. But before they know it, now they're about to blow their account because they keep on believing that the trade will go on their direction. It will come back, and the trade doesn't come back. So what do? Take a big loss. So now the skill that you must learn is to be able to identify the trade if it's going against you, so that you can take the loss very, very early. It's better to take the small loss than to take a huge loss. I think all of you guys, we are still with me. And number 4, guys, I think number 4 is very important as well. Number 4, you see this thing of following everyone on YouTube. this thing of you follow this person, you use this other person's strategy, you use this other person. Make sure that you get a mentor, somebody that's gonna guide you, somebody that's gonna tell you that no, your lot size here was too big. You shouldn't have used this lot size because your account is up to the standard. Use this lot size. Use this because your account maybe it's in this this amount. Use this lot size so that you'll be able to win, so that your risk will be up to the T, your risk will be up to the standard. Make sure your lot size that you use is up to the T. So you need somebody that's gonna guide you. So stop jumping from one mentor to another. Give that mentor six months. Maybe let's say you are with Mr. D. All of my guys, they know. I always preach this because some of them, they go and come back and say, I was trying this other strategy and it's not working. Stay with somebody that's gonna help you along the way. You need to be honest. If you say you're gonna be doing things on your own, you don't need a community. A community is there to help you grow. You grow together. Like in my team, if we win together. If we lose the trade, maybe we lose the trade together. So we work together, we share ideas. You need some people that will help you to grow. So you need a community. If you don't have a community right now, let me know. I'll hook you up. Let me know. That's not a problem. If maybe you're looking for signals, let me know. Maybe if you don't know anything about Forex, you want to learn what Forex is all about, how to trade Forex profitably, let me know. I'll help you as well. So guys, that is very important. Don't jump from one person, from one mentor to another. Don't follow everyone. Don't follow everyone. You end up not knowing where you're going. So because when you follow this person, this other person will say no, use this lot size. This other person will say no, use the strategy. And all these strategies, their risks are not the same. If you are using a strategy, like for instance, in my team, what I always tell my guys, I don't risk more than 30 pips. I don't risk more than 30 pips. That is me. That's my strategy, and it's working. It has been working for me. And yeah, so the guys know that, and we are winning with that. So guys, if maybe let's say you're with Mr. D and you go to somebody else, and that person will say no, your stop loss maybe is too tight. It's too tight because of their strategy. I believe in a tight stop loss because I don't have to. In Forex, I'm not here to donate money. I'm here to gain, not to donate. Yeah. So I make sure that my stop loss is very tight. It's very tight in such a way that I can see if I do my analysis, I know that okay, the trade from here will move from this direction. If it's get here, it's gonna move to this direction. So that's how I do my analysis. Hence my stop loss. I wait for the market to get to that point so that I can place the trade and my stop loss be tight. So guys, those are 4 things. Let me recap. Guys. Let me recap of what I was talking about here. I said it is important. The number one strategy that you must learn is to protect your capital. Yeah, that's number one strategy. So number one, make sure your lot size is up to the T. Number 2, don't open a lot of position. Number 3, learn how to identify the trade if it's going against you. Number 4, stop following everyone on YouTube or wherever. Stop doing that. Follow one person, deal with one person till you are in a point of standing by yourself. Okay guys, thank you so much. Guys, please don't forget to subscribe on this video and place the like button. What else is to press the notification button. How can I forget that? Press notification button so that if I post a new content, you'll be the first person to see it. Thank you so much. This is Mr. D. Guys, I'm back now.